Fertik. Wait, I didn't ask you to come away. I just want you to know that I'm very aware that, as you will be, that we just finished a panel on increasing diversity and inclusion, and now we have a panel of 5 men. So I'm aware of that. You're going to be aware of that. Progress is yet to be made fully in our world, but we are going to welcome amazing men to the stage. Please come to the stage. Gentlemen now. The irony, hooray for the gentlemen. An amazing panel we just heard from. We have an amazing group today. I'm Michael Fertik of Heroic Ventures, and I have the great privilege of hosting this panel, and I thank Trang and Alex and the TI team for putting together an amazing program for everybody today. We are verging on golf clapping. We're going to have to energize this. Matt Clifford here, who will also have a chance to introduce themselves, but I'll give a brief 1 or 2 lines on each of these amazing people. Matt Clifford is the co-founder and CEO of Entrepreneur First, which you've heard of, I think, a global technology company, builder, that helps technical students, which is very interesting, launch technology startups from scratch. And they've created over 120 startups in different places around the world so far. And then Daniel Gross over there at the end is an entrepreneur as an investor. I think are you 16 years old or 11 years old? How old are you now?
I appreciate your inclusive referencing of my age.
He was accepted into Y Combinator at 18. He sold Q, an AI-powered search engine, to Apple in 2013. At 22, which is in your bio, it's in his bio. Daniel was leading several search and AI efforts spanning iOS, OS X, and Apple Watch. He later joined Y Combinator as a partner and launched YCAI. And since then, he has founded Pioneer, which you can find at Pioneer.app, which he'll tell you about. It's a search engine for lost Einsteins. We'll hear about that from him. He's also a great angel investor or professional investor in GitHub and Cruise and Coinbase and so forth. And then Guru Chahal, a partner at Lightspeed, the very famous classic venture firm globally focused on infrastructure, IT, early stage investments in those fields, DevOps and so forth. He was also a founder, like so many of us here, of, is it Avi Networks or AVI Networks?
Avi Networks.
Avi Networks, and he'll tell you about that if you'd like. And then Jude Gomila. Jude is the CEO and founder of Golden, and he'll tell you about Golden. But before that, he was also the founder of HeyZap, which was acquired in January of 2016 by RNTS Media for many, 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 many monies. And he's also an active investor around the world. So we're going to welcome these amazing people, and we're going to give them a chance very quickly to introduce themselves. Let's go straight down the line. Matt, color us in a little bit more on you.
Great, well, thank you. So Entrepreneur First is a global talent investor. It's not quite true that we invest in students, but what we do is we invest in individuals around the world who we think could be great founders, but are currently living in ecosystems that are underdeveloped. And so basic things that you would take for granted in Silicon Valley, like finding a co-founder or coming up with an idea that is like venture backable, are missing. So what we do is we identify these individuals purely on the basis of who they are. We don't screen for idea, we certainly don't screen for team, and then we spend 6 months with them helping them find a co-founder from within our community, find a venture backable idea, and then we take them into the seed market.
Okay, that's a very, very interesting thing, and definitely part of the movement that some of you will subscribe to and some of you might be skeptical of, and that's a reasonable question, about the globalization of startups and startup efforts, but certainly something that is upon the world and definitely something that's being talked about so much in these past few years. Jude, tell us more about Golden.
Sure.
And yourself.
Yeah, thanks for having me, everyone. So I am trying to map out every single topic that exists. Today we've got one of the best...
Say that again. Every single topic that exists.
Yeah. So it's an ambitious plan. I spent around 8 years working on a mobile advertising company, and then a lot of time to think about what I should be spending my time on. And I kept coming back to knowledge that we have, a distinct lack of ability to get to the actual core subject. So Wikipedia has been around for 18 years. That straight up says an opportunity to me. And it's done an amazing job, but there's another level that we could take this to. So Google Knowledge Graph has around 10 billion entities inside it. Wikipedia has 6 million articles in the English language. That's around the 1000x delta. So I started seeing subjects like HelloSign got bought by Dropbox for $230 million recently. It was deleted from Wikipedia a few weeks beforehand. SV Angel, you've probably heard of them, Ron Conway. It was deleted from Wikipedia as well. It's not there. You can go and look it up. It's not there anymore. Clarice Phelps, she co-discovered the element 117, talking about diversity and inclusion. Black female scientist, 30-something, deleted from Wikipedia. She's not notable enough for having co-discovered element 117. So we clearly have a problem here. I want to map out every single topic. We're using AI to try and pull it together, and humans. Go to golden.com after the end of this panel. Check it out. Give me feedback. On the side, I invest in companies. I've done 170 investments so far. Gusto, Carter, Boom from seed, around 7 unicorns from seed, biotech, and enterprise.
Daniel Gross, bring home this extraordinary group. Tell us more about Pioneer and Guru, Chahal. Guru, you're both an entrepreneur and a classic venture investor. We're the only one on the panel, I think, in terms of being at a very strong, famous Sand Hill Road firm, but also an entrepreneur yourself. Tell us about that journey and what you're seeing now and what you're focused on now.
So let me start with Lightspeed just a little bit. Lightspeed is a global venture capital firm. We've been around for a long time. We have about $7 billion under management today. We invest both at the earliest stages of a company, as well as the growth stages of the company out of 2 active funds at any given time. The early stage fund, which is about $750 million, and a growth fund, which is over $1 billion today. We're a global firm. We've got offices here in Israel, in India, and in China. So looking forward to a discussion on why that's the case and what we see in the global ecosystem as well. Lightspeed historically has been active on both the consumer side as well as the enterprise side of the business. I represent more the enterprise side of the business. My journey started out of school more on the entrepreneurial side. I've been part of 3 or 4 startups. I actually joined Lightspeed as a full-time investor back in 2011, 2012 timeframe, and then invested in a few and just had that one final itch where I felt like I have to go back and start something really interesting, because a lot of interesting things were going on in the enterprise infrastructure space. So we started a company called Avi Networks, along with 3 other of my co-founders who I met at Lightspeed when they were sort of noodling on their next idea. And that was a great journey. That company, last week, VMware announced their intention to buy Avi Networks. So that ended, that was a great outcome for the team and the platform. And this happens a lot at Lightspeed, where we see our goal, even at the scale where we are, with 25, 30 investing partners, deploying a lot of capital. At the earliest stages of our company, our goal is still very, very simple, which is bring together really smart people and really smart ideas and give them all the help we can to execute on those ideas, which is really critical. And so we're committed to that vision, and we'll see how things evolve from here.
Okay, now back to Daniel Gross. Let's bring us home on this amazing panel. Tell us about Pioneer and what you're doing, your perspective.
Thank you so much. Hi, everyone. My name is Daniel. I started, I guess I only have one gear, which is I know how to start search engines. The first search engine I started was acquired by Apple in 2013, as mentioned, and I was a partner at Y Combinator for a while, and then I just started my second search engine, although for a little bit of a different kind. Instead of trying to find websites, documents, or files, Pioneer is effectively a software search engine for incredibly underrated people that have tremendous ambition and potential but have been missed by the current system. And what we do is we write software that kind of prospects the internet for these people by means of gamification, psychometrics, and a bunch of machine learning, identifies the work that they're doing, identifies the project they're working on, and invests automatically in their work. So there's very little human intervention between the kind of the capital and the next Einstein, Marie Curie, or Elon Musk. Started the company late last year, and the software's funded about 60 people around the world today, working on everything from curing sepsis, which is a leading cause of death in US hospitals, to a 23-year-old starting an Airbnb competitor in Africa, to a 21-year-old building a self-driving car company in Australia. Truly kind of a global set of investments, half of them in the US, half of them kind of spread across over 100 countries. We think that the power, if one would bring the scale of the internet and the power of software to investing, we could end up doing thousands, maybe tens of thousands one day, millions of investments a year. because we don't have to rely necessarily on human intervention, application screening, and all those things that kind of slow down the process.
So staying with you for a second, Daniel, you had an interesting perspective on this question. Let's say 10 years ago, 20 years ago, maybe even 5 years ago, you'd get some venture capital, you'd get a group of people together in a garage or in one room, and you try to make magic. And you have a perspective that possibly remote teams or certain kinds of remote teams might be a component of the future. Can you unpack that for us and teach us something about what it might take to build a unicorn of the future in terms of distribution, literally distributed teams?
Right. Yeah, I mean, to date, Silicon Valley's pretty much been the hub of everything related to technology and startups, and it may continue to be so for the foreseeable future. But there's this interesting thing that goes on here in San Francisco, which is you'd rarely find someone that's actually native. Everyone here is an immigrant from somewhere else. And so, I think that's kind of proof that the talent is kind of globally distributed. People happen to flock here for the kind of collective effervescence that gets built when you have density of really great people put together. And the experiment that Pioneer is trying to run is whether you can give that same sense of what a great city feels like Manhattan in New York, like Manhattan or San Francisco or Singapore for that matter, or a great company like Google or McKinsey, if you could give that same sense of density on the internet. Mm-hmm. Because if we can kind of inject that Californian je ne sais quoi into...
That's what they say in California. They say je ne sais quoi.
Well, certainly if you're drinking the right wine. Into thousands of people around the world,
right.
that unlocks significantly more remote teams. You become significantly less reliant on things like visas and immigration borders in order to kind of create greatness. And it very well may be that you cannot do this, that you have to get people to physically congregate in the same place together. And if you buy that thesis, then your hubs, be it London or Silicon Valley, will continue to be the hubs. But if we're able, through the magic of, say, Zoom, chat, all these nice new internet tools that have been built over the past couple of years, to recreate what it's all like to be in the same room together, then I think remote teams are the future.
Certainly an experiment that's being run now. Jude, you have a global audience for your product. Do you have a global team? Do you have a remote team?
We do actually, and this is something that I debated. The first, in my own mind, should I do a hybrid team? And I agree with Daniel that, well, this is an information problem where it's becoming easier to communicate with the team members. The more information we can have and lower latency, the more it's going to be like in being in the same room. So we got half the team in Europe, and the cost base is lower.
Where's the other part of the team?
In San Francisco.
San Francisco.
Yeah, so I feel like there might be, I'm seeing this happen with other companies.
Are they in one
here.
place in Europe, or are they
They're
around
actually
Europe?
spread around, yeah. They're spread around. We got people all over Europe, and that's been an interesting arbitrage there of thinking. And we always joke about SF, like, why are we in San Francisco still? We have $10 billion TAM within 2 minutes walk, 2 minutes coffee walk. And the thinking is still here and the talent's still here, but there are definite challenges to starting a new company.
Something you might be seeing now is, you used to see engineer number 30 or 60 get hired outside the Valley, San Francisco to San Jose, and now it's often engineer number 3 or 6. It's very much a different pattern. And there is one emergent practice, which is a remote team that's distributed, another one which is a team that is in one other place that's often driven by a key person on your team in the Bay Area who might also have a key connection to another part of the world. Okay, Matt, so you have hubs that you are building in different parts of the world. Do you find that they profit from interaction with one another, or going to market with one another, or do you find they profit from recruiting from one another? And there are 5 or 6 cities you're in, right? Could you unpack that?
We're in 6 cities around the world.
Amazing.
So we're
a truly global
so
enterprise.
we're in Europe, we're in London, Paris, and Berlin, and in Asia, we are in Singapore, Hong Kong, and Bangalore. And I suppose we don't really think, though, of those as markets. We see them as like talent aggregation spots. And so, I think there's probably less familiar to this audience, but in Europe, there's a huge amount of hand-wringing about, why hasn't there been a Google of Europe? Why hasn't there been a Facebook? We were talking about this before we came on. And I think the answer is just very simple, which is it really matters who starts companies. And actually, I think the single most important factor in determining the success of an ecosystem is what do the most ambitious people do with their lives in that place. if you grew up in London, or rather, kind of the UK over the last, kind of 30, 40, 50 years, there was one very clear path that was a very obvious way to obtain money and influence and power, and that was to go into financial services.
Right.
And as a result, we have one of the best financial services hubs in the world.
Right.
If you grew up in Singapore over the last 30 years, there was one path to have money and influence and power, and that was actually to go into government.
Right.
And as a result, Singapore is the best civil service in the world. Our job is to create a microculture in each of those places where we capture the most ambitious, the most talented people in those places and say, you don't have to be a civil servant. You don't have to go to Goldman Sachs or McKinsey. Actually, there is this other option, which is to be part of a global community of people that actually want to build companies, not PowerPoints. And I think when you're able to do that, you fundamentally change the character of an ecosystem.
So we're going to get back to the discussion in a second, but we're going to pause to play a stimulating game. And we're going to start with you, Guru. And the stimulating game is this. Here are the rules of the stimulating game for the panelists. We're going to go one by one. We're going to start with you, Guru, and hopefully you'll play along the rules. Here's the game. The rule is you're not allowed to name San Francisco, the Bay Area. Let's say the Bay Area is a metropolitan area. Let's call the Bay Area a metropolitan area. What is the top place, the top metropolitan area, you're not allowed to say China, the top metropolitan area in the world that you think is going to produce the most unicorns, wherever it is, America, outside America, wherever it is, top metropolitan area that's going to produce the most unicorns in the next 10 years. And number two, and don't be afraid, what is the most overrated metropolitan area in terms of tech investing? This is high tech, not life sciences. What is the most overrated place in the world in terms of metropolitan region for tech investing right now?
Is the first question absolute or underrated?
No, the first one is an absolute question. The second one is the most overrated question. The first one is, here's where I want to go. And the second one is, I'm being a little saucy. So go ahead, Guru, you go first. This is our game, then we'll come back to our discussion.
Wow, that's so we do have access to some amount of data, looking back. So here's what the data suggests today. So today, if you look more broadly, there's about 300 to 400 unicorns in the private markets that have been created over the last 5 to 10 years, right? That represents about 5% of the total S&P 500 market cap today. Out of those, about 50% are in the US, about half are outside of the US. About a third of that, the rest of the half, of that 50%, about 30, 40% are in China, another 10, 15% in India, and more broadly. So your question was,
number one,
what if we roll this forward?
What's the number one metropolitan area? Not China is not an answer. Metropolitan area.
Metropolitan area going forward.
You are a venture capitalist. You see the future.
China, the country.
You're allocating capital.
So let me just the data clearly shows Bangalore is
your answer.
Is well positioned
Next.
be
What is the
number
most overrated place that is not Bangalore? We're not doing VC answer pontification. This is a game.
All right,
Number one is Bangalore. Most overrated place.
LA.
Good answer. Sorry, guys. Okay.
$1, Bob.
Daniel Gross, go to you next. Number one, top place that is not the Bay Area, and number one overrated place. Thank you for being brave, Guru.
Let's just all give hand of applause.
Let's
to
do Guru. Okay. Come on, Jay. Come on, play
Vamping.
along. Play along.
Number one place.
It's not the Bay Area, metropolitan area.
Hometown, Tel Aviv.
Yep, great answer. And number one overrated place.
Probably Shenzhen. Is that?
Ooh, interesting.
An
That's
okay
a metropolitan area.
Kind of zone for
it's
you.
okay.
Is that too big? I can pick a neighborhood or a
Over
house
to you, Matt Clifford.
Well, I'm going to be very boring. I already was going to say Bangalore. I would say Bangalore is my answer.
Okay, great.
I think the most...
You're along Bangalore on this panel.
Yeah, I would say the most overrated place, although I'm still fairly bullish on it, but I think the PR is ahead of the reality, is Berlin. And I'm going to give you a bonus. The most underrated place is Paris, which is extraordinary, but really underrated.
That's good. Jude, you're next. Number one place, metropolitan area, the most overrated place.
I'm going to go for... I think Africa and India are going to be, I know it's not metropolitan, specific area.
Yeah, these rules, it turns out they're quite
I'm going to break the rules.
It's not. That's why you can't say Africa. It's not fair.
I'm most interested in India and Africa right now. I think Africa has huge potential to...
Be brave. Pick a place.
Lagos.
Lagos. That is brave.
And I'm not going to say that is going to be the number one to produce unicorns. I'm going to say that...
It's most interesting.
Most interesting.
Okay.
And then in terms of... overrated, and I can't say San Francisco, right?
You're allowed to say San Francisco. You're allowed to say San Francisco.
I think SF is turning.
Okay, good answer.
Is turning slightly. The infrastructure is not, fixing itself. The problems are not fixing it themselves. Costs are going up. We're living in a world where you can get funding globally now.
That's great. My answers are Tel Aviv, and that's the #1 future unicorn producer in my book. And the most overrated is New York. And I'll tell you why, because the rents are too damn high. And unlike here, if you're in Brooklyn, you don't want to move your company to the Bronx. You don't want to commute to Queens. And if you're in Queens, you don't want to go to Jersey. Whereas here, there's a little more flexibility. Those are my answers. Okay, so coming back, thank you for playing the game, everybody. Amazing. Look at, they're awake again. Look at, they're awake again. They're so stimulated. Okay, so now, what is an interesting, if you were starting or investing in a company today, not a company from 30 years ago, so this vintage of 2019-20, what are some key themes or technologies, however you want to answer the question, themes or technologies that you think you'd be looking for to form, to found, to inspire, to look for key people? I know that if it's AI, then give us a flavor of AI. If it's deep tech, give us a flavor of deep tech. Try to give us an answer. Matt, we'll start with you.
So we recruit for individuals who we think have skills that will turn into companies. So we very directly have to think about this.
Great.
I would say right now we're really excited about computational biologists.
Great.
Partly because we think that there's a lot of things they can apply that to that are going to become very, very exciting. But partly because relative to like straight, say, machine learning talent, they're massively underrated as
What is computational biology for people who don't know? By the way, most VCs who are investing in computational biology do not know what computational biology is. They say, oh, I can spell AI, and drug discovery sounds like a big market. I'll invest in that. Not going to be a winner. What is computational biology? You know what it is.
Well, we mean a very simple version of that,
Great.
which is simply like biology is a computational problem. So like biology creates and is a data generating process.
Great.
And there's lots of interesting things you can do with that as you can with any data set. But I think like the opportunities in that are becoming very huge. We also think that, as I said, the talent is very undervalued relative to, if you look at starting salaries of machine learning PhDs versus computational biology PhDs.
By the way, Berlin oddly becoming a hub of that practice of computational biology. That's a great answer. Jude, what's an interesting field? I know, setting aside your company, which obviously is where you're placing a major bet, what other technology or theme would you think is going to create a new set of unicorns?
So one theme I'm looking at is companies that create optionality in the ecosystem around them.
Great.
So if we look at, I think there's been this kind of company tech theme where you've got Gusto and Carter lifting up all the boats. And if we abstract that, what are company, dev tools as well has been an interesting area. So what are companies that produce optionality for other companies? The other theme I've been looking at, companies that directly reduce human suffering, whether it be through biological disease or mental health.
Interesting.
So we saw Calm.com became a unicorn out of
Calm.
nowhere. No, people didn't really predict that.
It's a meditation app.
Yeah, it's a meditation app that reduces human suffering. So if you can break that problem down, we all want to reduce human suffering. I think everyone's mostly aligned, apart from maybe a few people out there. So that's a great theme as well. Another specific theme is using biology to manufacture. So we've seen cellular agriculture, plant-based meat, Beyond Meat, all these kind of IPOs happening. There's companies like Vitro Labs who are doing cellular-based leather printing, so they can make leather. So I think if we look at manufacturing in a completely different way and say, how do we produce this with biology? How do we produce all chemicals, all products around this? This seed should grow in a lab, and it should be completely, biodegradable.
There's a team at MIT that was trying to grow a house from a seed.
Yeah, I think if you think about the cell and you think about biology and the packet of information in the DNA, it's the perfect bootloader. It is this package that can grow all the stuff. And it can replicate, so that's good for business.
Yep.
It can biodegrade, so that's good for the environment, potentially, unless it's a virus. And so biology is a completely changing manufacturing. Like, could we make a plane with biology? So we're seeing it right now in homogeneous fields, and we'll see it go through chemical manufacturing. We'll see it go through all manufacturing in the next 50, 100 years.
So Guru, very much an expert as a founder, as an investor in infrastructure and DevOps. Is there something obvious or not obvious that you think is a place where unicorns would be born today, perhaps in that field, if you'd like to answer that way, or not, if you don't want to answer that field? Where do you think, where would you point towards? What are you looking for? What are you looking to find in that area?
Yeah, so more broadly, at Lightspeed, of course, we invest in multiple areas. So Calm, for instance, is one of our investments. But at a personal level, what I focus on is how do we use technology to take what are generally resources locked in individual silos and islands and consolidate those, put an API on top, make that a very reusable resource so that we can build interesting applications on top of those. Could that be to reduce human suffering or just enterprise efficiency and so on?
What's a good example of that kind of company? That sounds like a very insightful remark, but can you concretize it for us? What's an example of the last few years that you think might be a good model for that?
So I think, let me take a
sounds like
two or three
Twilio
years
to me.
Yeah, Twilio is a great example. Yeah, thank you for
Docker.
pointing that out. So Twilio is a great example of something that was really, really hard, and companies were doing one by one over and over again, and then
Messaging
somebody comes
systems,
along and
messaging
just
systems,
puts
yeah.
an API on top, and suddenly every website you go to today, you're able to call somebody really quickly
Yeah.
because somebody like Twilio solved that problem for individual developers, made it easier to consume. On a more day-to-day basis, every time we travel, why is it so much easier for us to get inventory, whether it's on ticketing or airline tickets, on hotels and stuff like that? It's because somebody did the hard work over the last few years of consolidating that information, making it easier to use. And you'd be surprised, it's still actually dramatically harder to use. An individual developer can't really call a single API and get an inventory of all the hotel rooms all over the world and do something interesting with it.
Right.
That's a problem that's waiting to be
So
solved.
things
there's
like
very interesting things.
Elasticsearch, things like Docker, things like Splunk, Twilio, these are the themes that might
These are
be.
the themes, and they're in turn making it easier. And one of the reasons why you couldn't do this in the past is because there was no AI and ML. There was no easy ways of taking stuff that was sitting in text and promotizing that, putting it on the other side of an API. And now thanks to NLP, thanks to a number of technologies in this space, you can actually read reams of data,
Right.
structure it, put an
Right.
API on top, and make it easier for other developers to utilize. And that's a very interesting space for us.
Okay, and so Daniel, whether it's AI or global something or search, what are things that you think will be the locus of this vintage of future unicorns?
One very interesting trend I find quite fascinating now is a kind of new level of abstraction of software. So historically, software really started out as something that very few people in the world could write with assembly. And then with C, we made it accessible to another ring of people. And with Python, we made it a little bit easier than writing C. And then with JavaScript, an even broader number of people could write software. And suddenly see the emergence of coding boot camps, really creating a whole new generation of software engineers because it became easier to do. And it seems like that is happening yet again.
K8, are we talking about Kubernetes, or what are we talking about?
I'm talking about all of these companies working on what some people call no-code. Companies like Zapier, companies like Notion, Airtable, a lot of the RPA software companies like UiPath are enabling a whole new generation of people who couldn't really write or can't really write JavaScript or Python to make software. And so this is everything from the kind of operational people at the company, previously bottlenecked on engineering, now able to piece together dashboards and software for themselves using products like Retool, or people that are able to now get retrained into jobs that generate money that are the equivalent of writing software. You could kind of think of this as the new coming of Accenture, if you will, except instead of having software engineers do this, you have platforms that enable kind of everyone to write software. And I think that's quite exciting, especially in an era where we're going to have generations of people that need to be retrained onto jobs. This strikes me as an incredibly lucrative investment.
One way of
area.
looking at it maybe is that what Microsoft Excel did for people who are educated but not necessarily specially skilled in numbers, these sets of technologies might do
That's
for
a great
people who
metaphor.
are educated but not specially skilled in software development or analytics.
That's right.
So very interesting. My answer might be, in picking up on some of the themes here, which are so well stated, and I hope to find deals like theirs, would be that one of the largest audiences today, one of the largest markets today, with some of the largest spend today, that basically did not exist 15 years ago, is the software development community, whether they're experts or they are newbies, whether they're deep, whether they're light, whether they're truly technically engineers or product people. There are, I think, 10 or 12x the number than there were just about 10, 11 years ago. So it's a large market, and in terms of concentration of unicorns that are emerging, going public, in terms of concentration of unicorns, there is a surprising concentration of unicorns, exited realized unicorns, that not just markups, exited realized unicorns that are actually facing developers and facing product people in the world like that. So very, very interesting remark. Okay, I have a very exciting next game, but I'm going to save it. Would anyone like to ask a question of these remarkable panelists? An easy one, a humorous one, a light one, a softball. Yes, sir, will you please identify yourself and ask a question of whoever you'd like? Dave McClure, the very famous Dave McClure, everyone. Is the mic on for Dave? Do we not want to hear from him? Okay. Best market, best geography on a relative valuation? The best metropolitan area on a valuation to value basis. A return exit basis. So the question is, for the panel, is there a metropolitan area that is very attractive to you or standout attractive to you in terms of the valuations you have to pay as an investor versus the expected return as an investor? Matt, we're going to start with you and give everyone else a chance. We're going to skip around so that not everyone has an equal chance to prepare.
I always tell people if I wasn't running Entrepreneur First, I would start a deep tech focused seed fund in Singapore. So
deep tech in Singapore. Answer, okay, yes. Daniel.
Probably say the Ukraine. I think deep tech's in similar vein. I see occasionally startups cold email me out of that area. The value.
Okay, just fine, fair enough. Ukraine is not a. Thank you, Dave, for playing. This is not a.
I stand corrected.
All right. Okay. So yes. So Kiev. Do you want to pick Kiev?
Sure.
Or
yeah,
Odessa, where my family's from. Odessa. Never been to Odessa. Okay. So Ukraine, something like Kiev, something like that. Okay, Guru. Is there a ratio that you think is very special?
Both sides of that question, Dave, are pretty important. What you pay and what you can potentially get. So Kiev is really interesting, but I'm not. I think some of these markets are interesting, but the value is what I question. But if you look at that spread, I think Tel Aviv, in general, for early stage enterprise, is still a very good place to go. And the same idea, the similar quality of teams, San Francisco versus Tel Aviv, in enterprise infrastructure especially, or security, or one of those markets, could be a 2x difference just in what you pay versus what you get even
All right,
today.
Jude, from the frontier of the world, what do you think? Was there a frontier? Lagos, maybe.
I'm going to go for London on this one. So
London is undervalued, but you're going to have the highest expected return.
I think the expected there are unicorns coming out of the UK. There are, and most of the focus has been in London. The prices are still pretty reasonable. So I think specifically if it's hard numbers. I mean, my previous answer was not hard numbers. We ran out of answer space. Hard numbers, London, and maybe Prague could be the next one upcoming. There's a ton of talent there. The prices are very low, and there's lots of interesting companies coming out there.
My answer would probably be, and I don't invest in any of these places, Boulder. I do invest in Boulder. Boulder, Tallinn, Estonia, and Ottawa, Canada. But I don't invest in Ottawa or in Tallinn. But if you're there and you really know it, you're probably getting things free. And then you might have a unicorn or two. All right, next question. Anyone else? The future of unicorns. We have very exciting, honest, amazing panel, future of unicorns. I can do the thing where I make an uncomfortable pause and just wait. If you haven't figured it out, I am shameless. Yes, the lady in the red, please.
Just curious to hear your thoughts around the realization of these unicorns. Will it be through M&A or IPOs in various capital markets?
At least someone is keeping us focused on how do we make money here. Thank you very much. Thank you. I appreciate that, keeping us honest. Okay, well, I heard someone say the other day, and I will not quote him or her, I will not name him or her, or they, or them, but I heard someone say a funny line, and you can agree or disagree, we can take it back or not. As soon as you get invested by SoftBank, sell your company. Okay, that's a funny line, someone said to me. That's an M&A, that's a vote for M&A. Okay, Daniel, actually no, Jude, let's start with you on this question if we can. Are unicorns kind of the realizations, and we hope they're going to be realizations, right? We're all rooting for realizations, everyone in this room. Are they going to come from M&A or IPOs, and if so, why? Let's amplify the question that way.
I'm going to try and unpack this because there's a lot of pieces on the table. I think M&A is massively underrated right now in the market. We're not seeing enough companies going to buy their competitors or upcoming startups. So I think M&A needs to increase. It's just on the table right there. Why weren't these companies? Why did Twilio not get bought early enough? So M&A is underrated. So that needs to increase. We're seeing new liquidity methods with the whole crypto model. And there are interesting hybrids here where you could get a piece of the equity of the team that produces these protocols and some of the protocols. So maybe there could be some kind of hybrid model. People are talking about also
Quick
getting
question.
dividends.
Did someone do this today? Raise your hand if you personally own any cryptocurrency. Personally own cryptocurrency. Raise your hand if you are personally blocked from owning cryptocurrency because either your spouse thinks it's just ridiculous or your job prohibits you. So very, very few people here who could own cryptocurrency do. So we still have, if you care about cryptocurrency, you still have an education process to do.
Yeah, and then we've got other, like we've got the long-term stock exchange, Eric Ries's new model. I think we may see new stock exchanges come up which have different models of not being so short-term. So I think everybody wants liquidity, but everybody wants protection of being locked in. Liquidity is risk of your team disappearing. Liquidity is risk of founders getting tired and not working on the project. Liquidity is risk of your investors not giving you advice. So I'm interested in the new liquidity models that may be out there. But we saw a rush of IPOs happen just now, but that may be a market timing thing.
So Guru, maybe I'll amend the question a bit so we don't have the same thing happen. So is there a kind of company, without naming names, but can you characterize a company that you think ought to be thinking about M&A, but perhaps is not thinking about M&A, but you'd like to encourage them, not in your portfolio, just in general,
Yeah.
are there qualities of companies that you think are really well suited to, and can you characterize them, perhaps in your industry, in your field, or perhaps more broadly from the global market?
So these are two slightly separate questions. That
Yes.
one's a lot easier, which is unicorn exit values. And the straightforward answer is I think IPOs will create most of the realization for unicorn exit values because, frankly, there's very few companies that are sitting on $10, $20, $40 billion that they can go out and purchase $2 billion, $4 billion, $5 billion slugs.
So once you're a unicorn, you have to kind of IPO.
It's all. I mean, majority of the realization will come in an IPO, but
Yeah.
we're also seeing sort of the post-IPO acquisitions with Tableau and MuleSoft and others. So it could be that. AppDynamics was one of our portfolio firms that was a $3.7 billion exit to M&A just before IPO to Cisco. So both will happen, but I think majority of the value is going to be created in the public markets,
Got it.
even if it's happening later. Then your question, Mike, is really interesting as well. And the answer, unfortunately, is very nuanced, but I'll just capture it in about 20 seconds, which is if you can, build it for the public markets. Public markets.
If you can, build your company for the public markets. Got
So
it.
you should always have an idea that I want to take this into the public markets. That's the most enduring company and creates the most amount of value. That's historically proven. There's very little question about that. At a corporate level. Now, at a personal level, of course, you can build small things and flip them all day long, and you can make tons of money on that. Now, to your question on when do I advise companies to look for an M&A, it's a very difficult question, but the number one is not us. The number one decision maker there is the founder.
Sure.
Right? So our different partnerships have different philosophies, and different partners have different philosophies. Our philosophy is go with the guidance that the founder is going to give you. The founder wants to sell at some point.
So
You're
okay,
not
so
gonna
we
lie
know
down
that you're
on
pro-founder. Just skip that for a second. So, because everyone is. So,
of course
so
I'm
is there a
biased.
kind of company, setting aside the
Yeah.
founder dynamic,
Yeah.
that you wish would consider M&A that is not? Just characterize that.
If you can't hit the public markets at, let's say, let's pick just random numbers, at a reasonably large revenue run rate, 85, 100, 150 in ARR, and still growing at, let's say over 20, 25, 30% or so, you're not going to have a fun exit. You're not going to have a fun time in public markets. You're going to get very short term, and the markets are going to grind you down. You're not going to be able to invest in growth.
So there's
and
a certain
R&D.
size,
So
there's a certain mass.
Yeah. So when the company gets to a particular revenue point, and growth starts to plateau, it's probably time to think about an M&A.
Okay, so if you're not IPO worthy, you should sell. That's what that means. Okay, so the next one is, from me, let's talk about blitzscaling and capital efficiency. So how many of you have heard the phrase blitzscaling? How many of you have read one page of the book of blitzscaling? Exactly. So let me tell you what blitzscaling means and what it does not mean. Here's what you think blitzscaling probably means, because I didn't read the book either, but until I talked to Chris Ye, who wrote the book, and he's in my office, we were hanging out, he said, "Did you read the book?" I said, "No, I didn't read the book." He said, "Did you read the back flap?" I said, "No, didn't read the back flap." So we had that moment together. Anyway, so here's what you thought blitzscaling, this is what you probably think blitzscaling is. You probably think that blitzscaling is growing really fast. That is not what blitzscaling is, according to Chris Ye and Reid Hoffman. What blitzscaling is prioritizing speed over efficiency, that's one, when you are in a winner-take-all or a winner-take-most market. Prioritizing speed over efficiency when you're in a winner-take-all or winner-take-most market. Now, many of the unicorns, many of the large, huge funded businesses have amazing founders and CEOs. Many of them are my friends, who many of them believe that they are in a winner-take-all or winner-take-most market, and they're running very, very hard to go after taking all or most of the market. So now the question becomes, is every market a winner-take-all or winner-take-most market? And is there a kind of category that might be raising a lot that has extraordinary companies? Let me say this very clearly. It's extraordinary companies, no matter how you cut the cake. Extraordinary companies. Should they be, in your perspective, are they truly in winner-take-all or winner-take-most markets? And I'll offer an example. I'll take a risk. I don't think that the transportation companies, the ride-share companies are in a winner-take-all or winner-take-most market. And so while these are going to be extraordinary companies and are extraordinary companies, that's a category that I think is not a blitzscaling category. And you may disagree, you may agree. Is there a category you think that is especially worthy of blitzscaling? And is there a category, or perhaps you can answer it this way, is there a category that you think is especially unworthy of blitzscaling? And we'll start with Daniel.
To me, the framework is whether you have local or global network effects.
Great.
And I think with ride sharing, you pointed out a market that has local network effects. I think another example of this is real estate. Companies like WeWork claim to have a global network effect. But in many ways, the efficiencies of scale they claim to advertise that are global are far smaller than the local ones. And so I'd imagine real estate is another local network effect and doesn't merit blitzscaling.
Okay. I'm talking to the guy about time. Daniel, come on, keep going. What do you think? I
But
want to make sure we're not overrunning our time. We're not. We're good.
okay, great.
Yeah.
Yeah, because there's a lot of
The clock
red
says 0,
coming
but he said
over-
we have 10 more minutes,
The,
so I'm trying
the
to
bomb
know.
went off according to this clock.
Maybe you're doing so well that he gave us 10 more minutes.
But on the other hand,
If you have to go to the bathroom, just get up and go to the bathroom.
if the company has a global network effect, I think Airbnb is actually a pretty good example of this, just because people have, in general, kind of international travel patterns. That's a situation where I think kind of blitzscaling is in effect. So that's my framework.
Very
for
interesting lens. So local versus global
Yeah.
network effects.
So abstract.
Yes, go
I
ahead,
was
Jude.
thinking along the similar lines of the network effect that you're trying to capture, and global, local is one dimension. So it's really, when you're doing the blitzscale, are you trying to capture the full network effect? And where does the network effect break? So in the local example, there's a strong network effect around locally. There's kind of network effects out there, but in Airbnb's side, the user's traveling the world, the network effect is global. So, you could sub in global, local for any other variable. It's just, can you capture
What's
the
another
network effect?
example that you might sub in?
Well, potentially a data set. So if you need to collect like a full data set, is there fragmentation in this data set? So you're going for one part of the data set, but then there's another data set over there. It's not really part of the same thing, so it doesn't really have the same network effect.
So you might say,
Yeah.
without commenting favorably or unfavorably, amazing company no matter what, they're all amazing companies. You might say that Carta is a winner-take-all or winner-take-most market because the net incremental value to the net incremental user is exponentially increased when any one N piece of new data goes into the data set, something like that.
And then
I am not a shareholder in Carta. I'm not involved in Carta, but just for example.
I am.
And he is.
I agree.
Amazing.
No, but I think with Carta there is a network effect. There's also framing the problem in terms of how much money you're trying to deploy and how much time to obtain a piece of land, a piece of value, where that value is encapsulated with the network effect. In
Matt,
terms of the blitzscale.
Your answer on blitzscaling.
So I have read Blitzscaling.
You have read blitzscaling. You're the one.
Well, Reed is my biggest shareholder, so
Yeah.
I kind of felt I had
Reid
to.
Hoffman's your biggest
Yeah,
shareholder.
so I felt I had to do that.
By the way, I have a New York Times #7 bestseller called The Reputation Economy, and I'm pretty sure my fiance hasn't read it.
And
And you haven't either, and I know that.
I was almost embarrassed that you took as much from not reading it as I took from reading it. But I would
That's
add
the problem
one.
with business books. They
But I
basically are
would
worth
add
page,
one thing that I'm sure Reed would add, which is the kind of final few words to add to your description is in conditions of competition. So it's
Good.
and so I think one
Good.
thing that sometimes happens is that companies want to be bigger than they need to be sooner because there is a prestige to scale. And so you get premature scaling when actually you're not, even if you are in a winner, what you believe will be a winner takes all market or winner takes most market, but you're not yet in conditions of competition, you don't actually need to do that. We see this a lot in deep tech where actually staying on the, if you genuinely believe that you're going to have a technological edge for a while, kind of staying stealth.
Is there an example you can point to of a company that really brilliantly stayed stealth, that did not take the prestige of a super halo round or of a super halo investor or something like that? Is there an example? And you're allowed to say, come back to me.
Well, there's a lot that I think are doing that in our portfolio now.
Oh, there are companies that you're involved in, but there's not one from the past.
Yeah, so, well, I'm sure there are. What I'm thinking of specifically is when you
is
get...
Is OAuth a good example? They just took a big round, but they were, I'm not involved in OAuth, but...
Atlassian?
Atlassian? Okay, or so you might say Zoom as well.
Right.
You might say Zoom, right? Because he took very little money, right?
But I guess the point is, like, it's very tempting to try and scale something before you fully develop that technological edge in deep tech, whereas actually, I think if you're not in that condition of competition, get to the point where the product is
There's another dynamic that many founders do, and some of us on this panel may have even done it ourselves. You take a huge round to be able to pay off the debt of the stuff that hasn't really been working, and to give yourself enough juice to go chin the bar at the higher level. And you know the company better than anyone, except perhaps your new investors. You get a lot of detail with them. But you take the money to go buy your way some runway to cover up some of the warts of the business that, of course, your investors should know, but maybe the whole world.
Maybe an example I've thought about.
Okay, go ahead. Think of an example.
So every so often you get an exit which kind of hits the headlines. Everyone's like, I've not actually heard of this company, or at least not. So a good example might be StemCentrix, where founders from suddenly had this enormous exit that had not been like the talk of the town. It's partly that I think their capital strategy had been pretty smart. They didn't try and, it's a very different kind of company, it's a life sciences company, but it's maybe an interesting
Life sciences, it does happen a little bit more often, though. Inside life sciences, the communities are very small, they're very well read. They actually go to conferences, they actually read the white papers, they see the stuff. I am invested in life sciences, and I'm amazed that when you present at a conference, people actually look, and they look at the webinar, they come and they get on the conference call in a very informed way. So it is a different, often when life sciences, you're dealing with just a higher class of human being than in high tech, actually. It's amazing. Any other questions for our very, very distinguished and vivacious panel? Yes, no, not fair. Not you again. Yes, ma'am, in the front. Yes, please, on the microphone.
Prior panel, and your blitzscaling point.
Blitzscaling and prior panel.
So I have heard people say to me that the reason that they don't have more diverse teams is because it would take extra time to make a more diverse team. So if you believe, and that's an assumption I'm making, that more diverse teams is going to create a better product, are you trading scale over quality of product in these environments, and when is that important and when is it not?
Definitely a Jedi level question. Okay, go ahead. Jude, go over here.
Okay, so this answer came from Albert Wenger from Union Square Ventures, and he said that if you got to a certain level of team and you had not sorted out the problem, then you would not be able to sort out the problem, because there would be a self-selecting flywheel. So I guess it comes to like figuring out if you're a founder or the decision maker, and you're setting the culture and what you want to do there, you should make that decision necessarily independent of this growth speed. Like, what kind of company do I want to build? And in some markets it might matter more to be on that spectrum. But yeah, he reckons that pretty much sub 10 people, if you've not figured it out, then you're in trouble. But at the opposite end of the spectrum, we've got other people with other views that do not agree with that, and they say it's going to slow you down, or you should only look at the variables of pure merit based, and there's that tension between the two sides.
Guru, would you like to take a crack at that?
If you don't fix it in the earlier stages of the company, there's no way you can do blitzscaling, because you're sort of self-selecting out huge parts of your talent base and just self-selecting for a very narrow aperture. So there's no way you can hire. I mean, you're going literally from 10, 20, 40 people to 1,000, 2,000, 3,000 people over the course of 3 or 4 years. You just can't do that unless you've got a very inclusive way of bringing people. And the way some of the larger firms like ourselves, like Lightspeed, can help is, we have sort of talent internally, services internally, where we work with companies at the very, very earliest stages to put in talent retention and talent hiring programs that are much more diverse than an individual going out and looking for other people in their image. right? Diverse or not, but we all have that bias, and we just need to fix for that.
Well, thank you for that. Guess what? We are going to give you 2 minutes and 20 seconds back into your day. And thank you very much for your attention, your great questions, your great energy, this amazing panel. Thank you very, very, very much. Thank you very, very much.